Hello, everybody. Welcome to 21 million. And boy, is the market crazy right now. Bitcoin, what is going on? Going to try and make some heads or tails of that right now. Let's take a look at the market and see where we stand. So right away, there's definitely some weirdness going on. The market cap is still over $1 trillion, so I mean, we really didn't make a dent. We had a minor trace back. So 24-hour volume, though, is higher than it was last week. Last week, it was a little over 40 billion. It's at 69 billion right now, with the price going down. So it seems like, to me, I feel like just from that, price might come down a little bit. Bitcoin dominance is at 41.4%. ETH dominance at 18.5%, and gas is down a little bit from yesterday. Definitely, I'm staking ApeCoin on apestake.io, and the fees were less today, significantly, almost half. Bitcoin's at 21,702, down from yesterday, 3.5%. Ethereum's at 1525, BNB's at 307. You know, last week it was hovering over 320. XRP's at 38 cents. Same thing. Last week it was a little over 40. Cardano is down 36 cents, down a more significant amount. It was kind of running similar price as XRP last week. Polygon at $1.28. And I got a funny story about Polygon. Still, it's hanging in there, hanging tough. Looks really strong. You know, you figure everything's down, 5% or better. It's Polygon, down 1% in the last day. It's not much. Dogecoin back hovering a little over 8 cents. Solana's at $20. Litecoin's at $92. So yesterday I think it was closer to 100. So yesterday was a pretty wild day. But let's take a look at the charts and let's go over what happened yesterday, because it definitely gets a little interesting. Usually, let's start at the weekly. So the weekly still looks bullish, guys. The money flow is coming back in. Okay, the momentum's still turning up. Obviously, we got the blue triangle, waiting for a green dot that would signify definite movement up. But even last time, if you look before COVID, the COVID crash in March of 2020, we have in April of 2019, it went sideways, and look at the wicks. Hold on, let me zoom in a little better for everybody. You can see the wicks down. It's going to happen. And how big are those wicks? Let's take a look. So here, it closed around $5,100, and it had wicked down within the next 2 weeks, 6.5%. So let's take a look and see where we are now. Let's compare. So we have, I did it from the open from the previous. Yeah, we'll do it from the middle. And now we're wicking down. We're wicking down 7%, depending on where you keep it. We'll call it 7.5%. I went the middle of this candle. So it still looks promising. It's okay. I'm expecting even more. I really wanted to close that gap. I wanted to hit 20, but I'll show you my reasoning as we go further down the chart. So here, this is actually the daily. This area right here, like I said yesterday, sub 21 to 20,800 to 20,004 approximately, is super strong, super strong. And you can see how many times it's bounced off of it, went over. This is a tough area. So to come down and find this as support, it was only going to give it strength. Okay, I think that we might trade in between these levels. Let me extend this a little bit more. Maybe we do something like this and we test it again, up, get denied, come down, go up, try it again, and then maybe a breakout. Okay, but it's time. This is from my quick drawing. It's end of a real breakout, maybe May. But it's going to take time. This is the beginning of the turnaround. Okay, this is the end of the bear market, beginning of a turnaround. So it's going to take time. All right, let's take a look at the 4-hour chart, and then I want to show you a couple plays I saw yesterday. A couple were successful. One was not as successful, and I'll explain it to you. But let's look at the 4-hour chart on Bitcoin. It's the same story. Fibonacci band, it looks like we're getting pretty close at the 1 mark, 21,478. Like I said, I think we're going to have a breakdown to the 786 level, and that's where we're going to trade in that area. But let's take a look at, so yesterday I'll show you the mishap first, okay? So as I've been saying for a couple of weeks now, Polygon and Matic, I'm a fan of, and I've been staking with ApeCoin, so I've been keeping my eye on those charts, obviously. And so what I noticed was, I thought was a good play. So I just see we'll go to the daily. I mean, for me, I see a rising wedge. Okay, so I see we're rising, just a quick drawing. And this is on Binance. I use the chart that I use, and I do my real TNA for myself, TAs with on Femex. So rising wedge. Yesterday, everything's crashing. I thought for sure we were going to break through. And at one point yesterday, like I said, this is a quick drawing. There was, I think it's more like this. Hold on, let me go back to the 4-hour. So yeah, so it was something like this yesterday. Femex, I think the chart looks a little different. But we had wick down and wick back up, and I thought for sure we were going to break through, and it turned out just to be an extension. So kind of disappointed. I took a little bit of a loss on this one, but then I did good. I shorted Bitcoin, and I shorted Ape. Okay, so let me show you something with Ape. And guys, if you haven't yet, check out the ApeCoin staking on apestake.io. 100% returns right now. So here. So this is the ApeCoin, which I found that it's pretty much moving very similar to Bitcoin. So when I noticed that, I was like, oh, Bitcoin's going to go down. Let me jump on Ape. And sure enough, it did. And I got lucky. I made some money there, and I made some money on the short of BTC and also Cardano. Yesterday I did okay with that because it looks pretty similar. This is the Cardano chart. And then also Dogecoin. I had shorted that too, which turned out to be lucrative. It was just the one with Matic. I figured it was going to break down, and it wasn't. I should have waited for a confirmation and then a retail. I should have done it responsibly, but I got caught up in the frenzy. So the big news from yesterday. Let's take a look at some things. So I'm about to show you some articles, and the moral of the story is if it's not your coins, it's not your crypto. Get your stuff off of exchanges, get them into wallets. Keep your money and your investments safe. Stop playing games. Coinbase isn't safe. Binance isn't safe. None of them are. Get your stuff off. And if we learned anything from yesterday, it's that. Okay? And the reason... So, here, let me pull up. So this is from CoinDesk today. SEC Chief Gensler warns crypto firms to comply with rules after Kraken shutters staking program. So, and he tells them to take note. So he's playing hardball. So a U.S. bankruptcy court judge ruled in January that any crypto deposited on the platform as part of the Earn program belonged to Celsius and not customers. So what's really strange about this, two things. So I've told this story before, that I had Cardano on Cryptopia before they went down. And Cryptopia was trying to sell the assets, or some of the assets, to pay for the servers that they were holding the assets on. They were being held ransom pretty much from the server company. And a judge ruled that Cryptopia was not allowed. Now, that wasn't in the United States. And to be quite honest with you, let me look up where it was. So it's in New Zealand. So Cryptopia was in New Zealand, and a judge in New Zealand ruled that the assets did not belong to Cryptopia. So Celsius now goes to court, and they ruled the opposite. But that goes along with these being securities. Okay, so let me go back to my screen. An SEC official briefing reporters on Thursday said the crypto company, hoping to offer staking as a service as a registered securities offering under the regulator's purview, would have to first register as a securities platform before getting the agency's Division of Corporation Finance's approval on product itself. So, guys, not your keys, not your coins, not your tokens. Get them off the exchanges. The government's not there to help you. They don't know what crypto is, apparently. They want to stop staking because companies aren't registering as a security when this is not a security. These are assets. So it's ridiculous what's going on right now. And like I said yesterday, they have their hand out and they're looking for a payday under the guise that they're protecting us. So, we're allowed to go and put our money into Chase and get less than 1%. But when Ethereum offers 5% for staking, we're not allowed to, be a part of that as American citizens, which is ridiculous. The only thing that Gensler said, so if there was some type of common ground, so Gensler said that Kraken wasn't letting customers know that it wasn't their coins. So if that's the case, then I agree. Kraken should let people know that. People should know that it's not their stuff when they hold it on there, on exchanges. So it's one thing that I might agree with him, even though I don't like that guy at all. So another article that I saw, and I'm not going to go through this too much. I posted it on my Twitter, and you guys can take a look. I saw it was on Zero Hedge. Operation Choke Point 2.0 is underway, and crypto is in its crosshairs. This is actually, so he said it was authored by Nick Carter. There's a really nice breakdown here by dates on how they are strategically blocking crypto companies from using traditional banking, and then and warning them that they don't want banks to be involved with crypto. If you are involved with crypto, you're going to get fined, penalized, or you're not going to be able to become a bank. So that's a little scary. I ain't going to lie. The headline reads worse than it really is. So if I were you, I would definitely take a look at it. It's on my Twitter page, and I'll also put the link in the description below. And guys, just take a second if you could, subscribe to my channel, and I will see you guys on Sunday for the weekly close. It's going to be interesting. I'm curious what happens over the weekend. Be safe out there, and I'll see you guys on Sunday, 7 o'clock.